Hey traders, TG Watkins here. It is August 24th when I'm recording this. And remember, if you guys are interested in the Moxie Indicator, you can get that at stockcharts.com. If you want to be part of the trading room, you can come over to simplertrading.com/Moxie and you can be part of the Moxie trading room. And so yeah, let's dive into it. We kind of saw the market melt off today, but you know what? Shouldn't really be too much of a surprise. Let's kind of talk about that for a second. So we know that this market basically just became extremely overbought. The number of stocks, there you go, the number of stocks over their 50-day SMA reached almost 90%. There's no place else left for the market to go when something like that happens. And so at the top there, I was basically telling our subscribers, I said, look, we should be expecting the market to take a break. We need the internals to cycle back down. Now, I didn't know that it was going to be going straight down for 3 weeks. I figured maybe we go down for a week, we bounce a little bit, we could go down a little bit, but I guess the market decided to get all of it done sooner than later. And so it's been a pretty stiff 3 weeks to the downside. And only this week are we starting to see a little bit of a potential floor. We can't say anything yet. We saw a capitulation bounce on Friday, and then we saw the market kind of move up for a few days, and now we got a big drop today. The market's in a range. Honestly, the market's just in a range, so let's not be too worried about it or anything else like that. But I will note that the number of stocks over their 20-day SMA is down to a level that we have tended to see bottoms before as well. Now, it doesn't exactly mark it, but it is something to kind of look at and say, hey, the internals have pretty much cycled back down. We can also see, not quite here, a little bit lower, there was a bottom. This was a higher low, was a bottom, and here there was a bit of a bottom, and now we're down here again. So, on one side of it, this could be a good thing. We were looking for the market to cycle back down. It was too crazy going into the end of July. We had a really good 2 or 3 months of a run that the market just everything took off. So we need to be prepared that this was going to happen. Now we just have to kind of like be patient and wait for everything to kind of right itself. Now, the one thing I will say is a bit of a concern is that not only did new highs go down, which is expected, the market's going to pull back, not many stocks are going to make new highs, but what's a little concerning is that new lows actually came up in force. If the market was pretty good and usually in a good trend, you will see the new highs kind of come down, but you'll kind of see new lows not really do much. That's because we're not seeing new lows. We're just seeing pullbacks of things that are in uptrends. But maybe this market is still very new. It's still coming out of a longer-term downtrend and sideways, and so there's still a lot of instability out there. And we know that's why the market's still been pretty crazy, and maybe that's why it only took 3 weeks for the market to come all the way back down. It's hard to really know and say. But if we look at what we're dealing with here, we could clearly see that the market got overbought. And let me do this. So what we can see is there's the Moxie price trigger to the downside on the hourly chart. And then what happened? Price stayed over the hourly 50. The Moxie indicator was below 0. That's an inverse trampling move. That was basically the Moxie indicator setup that then got triggered by the Fitch downgrade of the US. And since then, I was expecting any sort of bounce in through here around the daily 21 or the daily 50. It didn't happen. It just went straight down. And at least you could stay safe, because if you look here, any bounce was handily rejected by the hourly 50, and the Moxie indicator was super far below 0 and all that kind of stuff. Now, when we did finally get a bounce, where did it bounce from? Right on that third ATR. How's that? Pretty good, right? Now, the other thing is, I've been telling all the subscribers and everybody else, like, look, this is only going to be a bounce. And the way we know this is only going to be a bounce is that if, when price gets over the hourly 50, the Moxie indicator is still below 0. And there is no divergence. You can see we got price down, price up, and we got the Moxie indicator down, Moxie indicator up. There's no divergence, okay? If you want to see divergence for the kind of stuff that I'm talking about, come over here. And I'll just show you guys this, because this was pretty important. I think this was around the beginning of March. Notice here, now you have price down, now you have the Moxie indicator up, there is your divergence. And then you could see here where price actually started to engage with the hourly 50, and notice where the Moxie indicator is, well above 0. So we are far away from this being a thing, and we just don't know where price is going to go yet. It could keep going lower, it could hammer out a bottom, like we're just not really sure, but I know we're not ready to go up yet. There will be bounces like we saw from Friday, but we don't ultimately really know where things are going to go yet. It still needs more time. Now, I will also kind of put into context that maybe this isn't the worst thing. Like I was telling you earlier, how most stocks were just kind of overbought. They were extremely high. We had 90% of stocks over their 50-day SMA. And if we look at things like Tesla, well, they got really extended. They ran up into their upper resistance. They got really, really far away from their moving averages. You can even see that here on the monthly chart. Just there was a gap between price and the moving averages. And you could even see it came right up here into an area of kind of price congestion, resistance, and all that stuff. So a lot of this makes sense. And we were expecting some sort of pullback, whether it be a flag or a pullback. And like, not really sure. Turns out it was a pullback. And you know, if the market's not going to fall apart, let me put it this way: if this isn't signs of something worse that's going to be coming, then this is actually really good and this is healthy. This is how the market resets itself and says, oh, well, we cleared out the weak hands, we came back down to support, and now we could actually start moving up. Because if you look at this, you see here we could actually be in possible support for Tesla. And you can see here it's coming into moving averages, and it's also coming into moving averages. So we don't have enough information yet, but big picture, this pullback might actually be a good thing. And if we look at Tesla, it's still just too early. Now, what I could show you, let me slide this all the way over, right there. What I could show you is, you can see here how price kept wanting to go higher. Notice that the Moxie indicator was not going higher and basically was below zero. It was like at and below zero. So it was telling you there were some issues going on. Plus we knew that price was really going to get very extended up there and really far away from some of its major supporting moving averages. Then the real ticket happened during earnings, and then you can see what? It got underneath the hourly 50 and then it just continued to fall down, and you can see the Moxie indicator was well below zero. So if you are a short trader and can carry a trend, this was a pretty clean trend. It ran right into the underside of the hourly 50. The Moxie indicator is super far away from zero, and just basically kind of told you, like, yeah, carry this thing on down until it gets oversold and it wants to snap back the other way. I mean, look at that. Like a waterfall, and then it finally gets oversold. There's the capitulation, and then you wash out finally the last people who could handle anything, and then they turn price around. I mean, it's kind of a cruel joke that the market plays. And at this point, now we're in an area of sideways chop and consolidation that we just need to figure out if the market's going to hold or not. So with today's drop, it's not really a problem. The market bounced, and now we have to spend some time figuring out if it's going to actually be support or not. And you can see kind of the same thing with Tesla. We don't have enough information. Sure, it could go lower, but what if it actually just kind of comes down and maybe does a double bottom, then goes up, and now we're resumed again? It's a possibility. Of course, if this gets worse, maybe there's an up and then it can continue down. We're just going to have to wait and watch and see how that all kind of unfolds. Now, some of the other things we can be looking at is, if we say, look at USO, these are some areas that have been having some pretty good, Moxie type rules. Let me get this set up to tell you like what's going on. And with USO, not that it hit the third ATR, but you can notice that it got really overbought because it started to get away and pull away from its moving average support. It just, when they get too far away, they want to come back down. And so this should be expected. And it's very similar to Tesla. Like, look, you had a huge move on a weekly chart. I mean, this was a downtrend for months, and finally you get this huge move. Yeah, what do you think it's going to do after some time? It's going to pull back. It's going to say, hey, I went vertical, I ran away from the moving averages, now I need to come back to them, and then we'll see if we can actually find some support on these pullbacks and move higher. So again, so far, none of this is really too alarming. It all kind of makes sense because it just got overbought. And you could just see how wild of a move this was because it just kept running that third ATR, and look how far away it got from its daily 50 SMA. Now the process of how it comes down, that's a little bit different. For the SPY, it went straight down. Like, that's what we were talking about. It didn't bounce. It didn't bounce at the 21. It didn't bounce at the 50. It just went straight down. Now, if we look at USO, it did the more typical thing. It did actually pull back and bounce. You'll see how it pulled back, went to the 21, bounced a little bit, and then broke. And yeah, it's probably going to continue its way down. And basically, I have a feeling it's going to, price and the daily 50 are going to meet, at least. And maybe price could go below the 50, but something like that. And you can see here, boom, there's your Moxie price trigger. And you can see how price was trying to move up, and notice the Moxie indicator kept going down, down, down. And right on cue, there's your Moxie price trigger. We got a little bit of bounce at the 21, and what it did, ran right into the underside of a downtrending hourly 50. Moxie indicator super far below zero. There's still no clue, no sign, no hint of any kind of reversal. So, something like USO, still probably has plenty of room to go to the downside. As I said, most likely the daily 50 of some sort. So kind of just sit on your hands, let the market do its thing, wait for better days, and then we just be patient. All right. Thanks, everyone. We'll see you at the next one.